Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key.
Well, good day, everyone. I'm Epstein, and here we are on Monday, and this is the 27th of June, 2011. It's about 4:10 in the afternoon. I was in no hurry to put anything out right here because this is a dangerous time to trade. Why do I say what I'm saying? Well, you've got to keep in the back of your mind that this market's going to dominate things for tomorrow, maybe through the end of the week. The euro currency. What happens with Greece? We're already seeing the French banks come over and they want to roll over the notes, and they're talking not a 3-year extension. They want to re-roll into 30 years. What people want to do is, if you could see my foot, I'm kicking. They want to kick the can down the road, and let's give the market time and Greece time to solve its problems. Not a bad idea. The last thing I want to see in the marketplace is a financial meltdown. Nobody wins with that. We all don't need that. The stock market today reversed course up a bit, and that's good news. And you saw the bonds and the note markets both fall down. Other good news. Why? I think there's money coming off the table as people just want to go to the sideline. I don't think it's necessarily a trend change, but you don't know. The gold market is giving you miserable performance. I mean, what more do you want to hear for gold to go up than the Greek situation, the Italian situation, the Spanish banks, the U.S. can't get its debt ceiling in place. You got the Republicans and Democrats fighting. They're saying no tax increase, blah, blah, and if the U.S. can't meet its debt, so on, so forth. Okay. The gold's not buying into that. It's sinking. The silver market, for those of you that, and I did get emails, oh, Ira, you were so wrong when it got over $35. We're on our way. In fact, when it got to 37, I got notes telling me we're going to 45, 50. Terrific. We didn't. It's that simple. And I think I kept my clientele in pretty good shape in telling them that I didn't think we were going to happen there on the downside. The copper market's the interesting market at the end of the day. Does it have value at $4 or not? And that's what we're going to find out. You know, you still got China threatening to tighten. Their inflation rate's a little greater than they wanted to see. This is the gold-silver ratio, and it may have overdone it today. First time you heard me say that in a very long period of time. Why? We've been going sideways, and here we are attacking the top part of the band. This means you need more ounces of silver to buy an ounce of gold than you did before. When silver went to $50 an ounce, you fell down here. We'll see if this can push this band out or if this was like an exhaustion on the band a little bit. And it wouldn't surprise me. I am certainly not bullish the silver over the gold at this point in time, nor am I the other way. I think that the market's just bouncing and people are making their moves in the marketplace. This is the gold chart. Does anything on this look bullish to you right now? I mean, it might, but I don't see it. I see the market is stuck. It peaked out around the 1st of May. It's been sinking back, and this is typical common action. In fact, you can drop more because it's not uncommon for June and July to be weak months in the gold market. It's after that that I start getting excited. In fact, the more it drops, the more I favor that wherever we end, let's call it the first part of August, will be higher by year's end than that point in time from a historical perspective. When I look at the chart, it's really difficult. Where are you going to go short? Your stop is going to be at 1559.30. It's really going to be very far away. The market has fallen vertically from 1559.30 straight down today to a low of 1490.80. I mean, there's a time you want to be on the sidelines, and that this is where you're at on the sidelines. You've already gone through the 45-day average of closes. I'm going to expect the 18-day and the 45 are going to converge, and they're going to get very, very close together later this week, beginning of next week. If you really extend all the way down, I'm going to look for 1468, which is the 100-day average or the closer of the Bollinger Band, and you've already gotten under the Bollinger Band. So the only next thing left here, if you go back and you look at this, is the 1468 level should gold let go to the downside. You're already 2 days under the Bollinger Band. I doubt that you'll stay more than 5, but you're pushing this out the way I didn't think was going to originally happen. And I took big notice of this if you get my twice daily updates, literally right here. This day I'm pointing to is a day that I told my clientele, I think it's time to call it a game. I don't like what we're seeing. You couldn't go up and push the band out, but you're having no trouble coming down now and making that lip fall. So to see further downside, I think it's in the cards. This is a chart of momentum, and this is the problem. If you go short, number one, you're under the Bollinger Band. What are the odds of staying under the black band? And I'm going to step back here. How often do you see this market stay over or under the black band? It's not common. Number two, what you are, and I want you to remember this area. You got oversold here, you bounced. You're getting oversold here, you can easily bounce. Resistance, going to be back up at 1532 as I read the chart. That number will change day to day, but not dramatically for the next few days. Here's what you're scared of, and this is the silver. Remember, I've warned you, the longer this bottleneck goes, and if you start pushing on it, the further you can start slipping. And even though the silver's oversold, this isn't quite like the gold yet. If it's real, it's going to start accelerating to the downside. Have I recommended anything to my clientele? No, I've got to tell you that. I am petrified of any position, long or short, in a big manner in the financial markets in front of the Greek vote. I don't know what to expect. In the copper market, you see you fell right back down to the Bollinger Band and you stopped at that point in time. And this chart is a very difficult chart because the swing line has made higher highs. So far it has higher lows. Take out 403.35 and think of this neck, and you might start pushing this market to the downside like the silver looks. Metal markets are not pretty charts right here. They're ugly at this point in time. This is a chart of WTI crude, American crude oil, in terms of price versus the foreign crude oil. You have to laugh at the Iranians. They come out today and they go, it was unnecessary, the move. It wasn't called for the IEA to say a word about releasing reserves, blah, blah, blah. The heck with them. You don't need them. They're not our friends, so who cares what they say? 1670, that looks to me like the zone that the market might want to retrace to, is a differential in price. But notice how the market's made continually higher highs and higher lows. The spread in the market is trying to find a home, and I don't know where that home is. In the crude itself, notice how the market's just hugging the Bollinger Band bottom. That's classic bearish action. And here, look at how this market broke out, and this is what I'm warning you about on the silver a bit. Doesn't that remind you of it? And then the market starts down, and at any point, this was oversold. You don't know where it's going. Now watch what the chart does. That's what you got to be careful of. That's really how you start analyzing some of this. The big rally back in Brent today, okay, how many days are you going to spend under a Bollinger Band? You've heard me say that the odds of staying above or below it are 2.5% of the time. So eventually you get that bounce. Doesn't mean the trend has changed. It hasn't. In fact, I'd be surprised if you get back towards the 113.89. When they set this reserves to come out, they use an index of oil prices in the Brent, and I think that index was near $112. And if that is the case, well, that's where the supply is ready for the market if people want it. What's the advantage of buying that supply when you can buy it cheaper on the futures board? I don't see why people would do that. Gasoline, a little bit of a bounce over the Bollinger Band bottom. That's to be expected when a market gets ahead of itself, but still clearly in a downtrend. And in fact, I don't see anything to change that. But let me help you with your trend. This is my research page, and I put out daily 2 updates in the market. I write the updates, and then I put out a phone update, oral if you wanted to hear it. If not, what you also get from the phone update is a text message that tells you I've made a recorded webinar, and I do those about 3 to 4 times a week. I review 39 to 40 charts at a time, and I put on the indicators of swing lines, Bollinger Bands, window envelopes, moving averages, and I know I missed one else there, but it's slow stochastics, that's it. And I move that together and I show you what I'm doing. It's like sitting at my shoulder as we're going through a chart together. And the idea is to give you the bigger picture and trade ideas. You only get to sample that for a short time because it is a subscription-only service, but it's yours free if you haven't tried it. I want to show you what we have to offer. Just call us at 1-866-973-2077. We'll be happy to set you up with that, or go to our website and sign up for our Futures Trading Kit. We'll take a look. If you haven't received our information before, we'll be happy to send it on to you again. At the end of the day, please remember, we are futures brokers. That's why I do these shows. We want to show you the information we have compared to possibly who you're trading with or what you're looking for. The difference here is we talk to you, and yes, I do pick up the phone and talk to people. I'm Ira Epstein. Have a good trading day.